Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. Inflation. It makes the majority of people poorer, but for those who understand it and unlock its power, it can make you incredibly wealthy. And today, we're going to explain exactly how that can happen.
Yes, welcome to the Property Podcast. We and our team spend all our week immersed in property, and often we like to bring you the latest insights that we've gathered from being in property all day and every day. But sometimes it's valuable to take a step back and revisit some of the core principles that get us so excited about property in the first place. This episode is one of those, and even if you've been listening for a while and you think you understand inflation, we're going to be sharing some real numbers that I'm pretty sure you'll find very surprising. It often happens that when the housing market gets a bit softer, the government comes to the rescue with some kind of new initiative. And Rob, it looks like that might be happening again.
Well, it's not exactly a new initiative. Well, the first part of the story anyway. It's an extension of something that already exists. And the government has been helping first-time buyers through its mortgage guarantee for a little while now. In fact, it was first introduced back in March 2021. What this scheme does is it gives banks confidence to lend to first-time buyers with just a 5% deposit because the government will act as a guarantor in the background. Now, the normal credit checks still apply, but the intention is that there'll be more 95% products out there on the market, and first-time buyers therefore will be able to take advantage of it and get on to the property market. Now, this scheme has already been extended once. It was extended for 12 months last year and is due to end this December. However, according to the BBC website, the Treasury is looking at keeping it in place for another year. So it could roll on all the way through 2024. There's also discussion that in the autumn statement that the ISA that helps people get onto the property market as well will be enhanced, and the value of the property that you can buy will be increased. And this is really aimed at first-time buyers in the southeast to help them onto the market. Now, it makes good reading as a headline, but both schemes are actually in place already, and it's just a minor tweak to the ISA scheme. So the property market has been softening all year. I don't think this has made a difference to that already, and I don't think it's going to make a difference next year. It just seems like an easy win. Oh, we'll extend that, but it doesn't really make a meaningful difference. So good for the headlines, but not so good for the property market. We'll see over the coming weeks with the leaks that will inevitably happen if the government's going to be a bit more ambitious with the autumn statement around the UK economy and, of course, property. And we'll keep you updated on that. But you'd like to think that something will happen of note, and note being a positive note, because they haven't got a lot of time left. The election is coming up next year. There's not a lot of this year left. So trying to get some good news out there, trying to get some wins on the board is something you'd expect the government to be doing. So we'll watch. The first leaks are not that exciting, but if anything exciting comes along, of course, we'll keep you updated.
And something potentially exciting is that the Renters Reform Bill, that piece of legislation that we've been talking about for years now, is due to be debated in Parliament on the day that we're recording this. So anything that comes out of that, we'll talk about on next week's show. And if anything particularly big happens in that debate, we will have a quick YouTube video up by the time you're listening to this. So do head over to YouTube, search Property Hub UK, and get all the latest there. Over the years on the podcast, we've spoken a lot about inflation and what it means for property investors. But from talking to some people who are newer to property recently, and who might not for some crazy reason have gone back through the previous 550 episodes, we've realised that there can still be some confusion about what inflation really does mean for you as an investor. So in this episode, rather than mentioning bits here or there or having it as a side point in a different episode, we're going to run you through the 4 big implications of inflation for property investors. So by the end, you'll be thinking about inflation in a very different way, and you might even be a little bit excited about it. So Rob, we're going to get into this using a real life example.
We are. We're going to go back in our time machines, 10 years, and we're going to buy a property in 2013. And the property we're going to buy is $135,000. So with approximately 75% mortgage, 25% down, we would have $100,000 mortgage. So a property worth $135,000 and a mortgage of $100,000. And that was purchased in 2013. Now, let's look at what's happened since then. So inflation, CPI, Consumer Price Index, that's just a measure of inflation, has gone up by 46%. So inflation has gone up 46% over the last 10 years, which is an average of just shy of 4%, 3.9% to be precise. House prices have gone up by 65% according to the Land Registry. So house prices have outperformed inflation, which we know historically over time, that's what house prices tend to do. So you've got house prices up by 65% and inflation up by 46%. And rent during that same period has also gone up by 30%. Now it's shooting up at the moment, but this is stopping at today and going back 10 years. So inflation's up by 46%, the house price is up by 65%, and the average rent is up by 30%. So today, using the Land Registry numbers, so taking up the absolute average growth in the UK, the property value would be worth 222,000. So that's the property value, the property price. So that's impressive and interesting, but what's really interesting is the impact that inflation has made here, and particularly with your mortgage.
Yeah, so what's happened to your mortgage? Let's take a look. So the first point to make, which is a really, really important one to understand, is that over that 10 years, lots and lots of mortgage interest payments have been made, but they haven't been made by you. And this is something we've heard every so often. People have said, oh, well, when you're talking about inflation, what it does to your mortgage, well, that's great, but you're not factoring in the case that you're having to pay interest on that mortgage. So that is a cost to you. And while, yes, mortgage interest is a cost that comes out of your bank account every month, that payment will have been covered by the rent. So as long as your property is making a profit, the rent comes in at some point later during the month, the mortgage goes out, and you're going to have money left over. So the bank has received their interest, and yes, it's reduced your profit compared to if you didn't have a mortgage, but it's not a cost that's coming out of your returns. So when you receive a mortgage offer and it talks through all the different terms, there'll be a line in there saying something like, you'll pay back £1.49 for every £1 you've borrowed. So you could look at that and go, oh, well, I'm hoping to get capital growth, but I'm going to need to get a lot of capital growth just to cover that money that I'm going to have to pay back. But no, it's coming out of the rent. That's the beauty of it. So it's a basic point, but I think, Rob, a really important one to emphasize, because if you misunderstand that point, you could think that there are more negatives to having a mortgage than there really are, and therefore miss out on some of the inflation benefits we're going to speak about in a minute.
Yeah, it's not a coincidence that nearly all buy-to-let mortgages are interest only. And I don't mean just over 50%, the vast majority, because interest only is the most powerful way for the majority of people to tackle property investment. But let's have a look. Let's get into the numbers again. Let's go back to our example and see how this has played out. So we've said the value of this property is £222,000 now. But the loan, because you've only paid the interest, is still £100,000. So 10 years on, your mortgage, the number, is exactly the same. But the value is so different. Because originally it was a loan to value of 75%. But now the loan to value is 45%. So 100 into 222,000 is 45%. So your loan to value that you now have on that property has fallen dramatically. Or looking at it another way, the equity that you now have in that property has vastly changed. So you've got so much more equity now in that property. And that's just because the value of your mortgage has been eroded. But that's taking into account the Land Registry growth. But let's strip it back and just say property didn't outperform inflation and only matched inflation. Well, it's still really, really impressive, because your property now would be worth £197,000. And you still have your loan of £100,000. So just through inflation alone, your property would have gone up from £135,000 to £197,000, which means your loan to value would have fallen to 50%. And that's just inflation. So inflation has moved your loan to value from 75 to 50%. It's done the majority of the fall, because if you actually look at the price rises, it only falls to 45%. So just huge, huge numbers here. It makes such a difference. The power of inflation when using debt is absolutely incredible. Inflation erodes the value of debt. And that's why Rob and I are so passionate about talking about using mortgages when you build your property portfolio, but also using interest-only mortgages.
And that's about what would have happened if property prices had only gone up in line with inflation, not slightly more, as they did do over the 10-year time period. I think is such an important one, because it doesn't rely on attributing any magical powers to property. People say property always goes up, and Well, yeah, it does, but so does everything. It's not that property is that special. The price of everything goes up over time when measured in pounds, and yet your debt is fixed. And of course, this doesn't happen reliably every year. So at the moment, property prices are falling slightly and inflation is pretty strong. So over the course of the last, say, 2 years, this is not happening. But it's over the long term. So we're talking about a 10-year period here, but of course, even more so over longer periods of time, that you can feel very confident about this pattern playing out.
But it's not just the value of your mortgage or the value of your property that has changed. Your rents have also gone up. So rents during the same period have gone up by 30%. Now, recently, rents have been flying up. So the majority of that growth has actually been in the last couple of years. And if we did this in a few years' time, maybe that number would be a lot higher. But the facts are that today, over the last 10 years, we've seen 30% increase in rent. So that means if your gross yield was 5% at purchase, it would be 6.5% now. So a good growth. That's really good. And obviously that's because rents have gone up, but the amount that you invested hasn't. So all the numbers across the board are improving. Now, it is worth mentioning that some of your costs may have gone up as well. So that would bring your ROI down a little. But still, overall, you'd be up. So the value of your property has gone up, boosted mostly because of inflation. The value of your mortgage against that property has fallen, so your loan to value has gone down, and your yield has improved. And as we keep saying, the majority of this is driven by inflation.
So what we're seeing as a final point is that your mortgage has fallen in value as a proportion of the capital value of the property. It's fallen as a proportion of the rent payments. And finally, if you're earning income from another source, so you've got a job, then you will have had pay rises over the last 10 years. And you can gripe about pay not keeping up with inflation. That's been the case pretty much across the board over the last 2 years and over longer periods of time in certain sectors. But for the country as a whole, inflation-adjusted pay is round about the same now as it was 10 years ago. So your personal income will have increased as a proportion of the mortgage value as well. And this is important when it comes to repaying the mortgage, because people's concern about interest-only mortgages is, well, how am I going to pay it back? It's great that I only have to pay the interest every month, but in 25 years' time, I'm still going to have this loan to repay. But as a result of inflation, whether you plan to repay it from accumulated rental income that's built up over time, or from selling the property, or from your own savings, you're winning, because all of those are going up relative to the mortgage value over time, especially when it comes to the proportion of the capital value. We saw that with inflation alone, it would have fallen from 75% to 50%. So you can quite easily see how if you have multiple properties, you can get to a point where just selling one could be enough to clear the debt on the rest of them. And Rob, this is only over 10 years. We've both been investing in property for over 10 years, so we've seen these exact benefits that we've just run through. But we plan to be in the game for a whole lot longer. So if this is where you are after 10, imagine where you'll be after 20 or 30. If you know anything about our service, Property Hub Invest, it's probably that we secure you exclusive property deals at a discount. But I now make all my investments through Property Hub Invest. And what I value most is actually the time saving and having the care team on hand to deal with developers, mortgage brokers, solicitors, all the things that normally cause so much stress and take up so much headspace. Property investment will never be effortless, but having the expert team at Property Hub Invest makes it so much easier. If you're interested in finding out more about Property Hub Invest, just go to propertyhub.net/invest.
One of the reasons we've chosen 10 is the numbers actually start to look too good when you stretch it out further on 20 and 30 years. 10 years is kind of a space of time that most people can get their heads around, as a commitment to an investment. We talk about inflation a lot on this podcast, Rob. A lot of your last book was on that very subject. But the reason why we're a bit obsessive about this subject is two reasons. One, it's not really talked about a lot. Not many people talk about inflation. Inflation can absolutely strip away at your wealth. It can absolutely make you poorer. And you know what? For the majority of people, it does. But as I said at the top of the show, it can also make you very, very wealthy if you understand it and utilize it as a tool.
Of course, it is possible that property prices can fall over a 10-year period. We've seen it recently in Northern Ireland, but that is a rare event that tends to come after a very elevated and obvious boom. And of course, your mortgage costs can go up. We've seen that recently. Lots of things can happen. Things will go wrong. Property isn't a one-way bet. You can't just fumble your way in and expect to get rich. But the point here is if you approach it with intelligence and dedication and over a long period of time, then inflation is giving you a giant tailwind.
So if the first reason is nobody talks about this and more people should, the second reason is how ridiculously powerful it is. So that's why we come back to this subject and try to approach it in different ways, like we have again today, to help get the message across. And it's such an important message to spread. This podcast could be an ideal introduction to somebody who doesn't understand inflation. Rob's book, The Price of Money, is another great addition. So if you're feeling generous, go and buy somebody Rob's book. But if you're feeling just semi-generous, then share the podcast. Share this particular episode. And if you are listening now, because this has been shared with you, make sure you subscribe, because we cover these type of topics on a regular basis to help you not just become a great property investor, but just become wealthy over the long term. What we're trying to do on the Property Podcast is not inform people about property. What we're trying to do is unlock the wealth in as many people as possible. And it is possible. You don't need to come from a certain background. You don't need a tremendous amount of luck. Yes, all those things help. But what you need is to get on the ladder. And that's hard work and persistence for a lot of us. And then once you're on that ladder, make good decisions and stay on that ladder as long as possible, as this episode's talked about. So we will continue to give you the lessons, to give you the guidance on how to become wealthy over the long term. But don't keep it to yourself. Share it with others, because this is really powerful stuff.
Okay, we've just got time before the end of the show for Hub Extra, where every week we try to give you a resource, a tip, something to think about, something that's going to make your life a little bit better. We've been doing this for 550 episodes. Clearly, we're scraping the bottom of the barrel now, Rob, because you've just put air. This week's Hub Extra. I like air too, but come on.
Next week, water. No, this is not one of life's essential resources, but actually the film Air, which is a brilliant film. So I took notice of this film when it was first released because the story captured my attention. And the story is how Nike signed Michael Jordan. Now, that sounds pretty dull in itself, and I've probably not done it any great justice. And actually, the reason why I delayed watching it for a while is because I thought just that. I thought, okay, it might be an interesting story, but how good can this film be? Well, it's great. It's got a super strong cast. I like films with a business slant as well, so clearly there's some bias there. But the story is so well done and so entertaining and so interesting. The performances are fantastic. And if you enjoyed the book Shoe Dog, which Rob and I have both strongly recommended in the past, which is Phil Knight's story of building Nike, then you definitely will enjoy this film. So, Rob, a slam dunk endorsement from me on this one. And a great extra bonus is that if you have Amazon Prime, which I do, you can watch it for free on Amazon Prime at the moment. It's one of those films that are included. And you can watch the film there. And of course, this isn't a sponsorship. This is a genuine endorsement. So enjoy.
Okay, well, that is us done for another week. Thank you for listening. And do share this episode if you found it valuable and you know someone else who might do as well. They can find us by searching for Property Podcast on Apple Podcasts, Spotify, or anywhere else. And do make sure you hit follow on any of those platforms to make sure that you get all future episodes sent straight to you, because we're going to be back next week with another good one. Until then, have a great week and we'll see you soon. Bye-bye.
Bye-bye.